Welcome back to Today Assets Report, the channel where we break down the biggest moves in crypto, finance, and everything in between. And let me tell you, today we have got something absolutely massive to talk about. We just got a brand new interview featuring Brad Garlinghouse, the CEO of Ripple, sitting down with Maria Bartiromo, and this thing is packed with gems from start to finish. I mean, we are talking about some of the most significant developments in the entire XRP ecosystem. And honestly, some of what Brad says in this interview genuinely stopped me in my tracks. So if you are holding XRP, if you are watching this space, if you are even just curious about where the crypto industry is headed, you need to stick with me through every single second of this video because we are going to go through this piece by piece, and I'm going to give you the full context so you actually understand why this matters so much right now. Voice. Ripple's business is on a tear despite market headwinds. Now, the first thing that came up in the interview was the broader market environment. Maria asked Brad directly, how has the recent volatility, the drop-off in valuations, how has all of that impacted Ripple's business? And Brad's answer was actually really refreshing to hear. He acknowledged that the crypto market had some headwinds toward the end of last year and started this year relatively flat. But here is the thing. He made it crystal clear that Ripple's core business is not solely dependent on the price of XRP or the mood of the broader crypto market. He said, and I am paraphrasing here, that their technology is just one piece of a much larger picture. And that larger picture? It includes two massive acquisitions, both of which exceeded $1 billion, and both of which have absolutely blown past Ripple's own internal expectations. That right there tells you something important. When a company's own projections are getting destroyed to the upside, that is not a company that is struggling. That is a company that is accelerating. And Brad made it very clear that 2026 is shaping up to be a record year for Ripple across the board. Voice. Ripple Treasury, $13 trillion and a 0% crypto rate. Let's talk about that first acquisition. What used to be called G Treasury and is now rebranded as Ripple Treasury. This is a treasury management platform, and the way Brad described it is as essentially a dashboard for CFOs. Think of it as a control center where finance executives can manage liquidity across the globe, move money between currencies, and see everything happening in real time. Now, here is the number that absolutely floored me. In the last year alone, G Treasury, now Ripple Treasury, orchestrated $13 trillion in payments. $13 trillion. And here is the kicker. 0% of those payments went through a stablecoin or any crypto at all. Zero. And Brad said it himself. That is the opportunity. That is the runway that Ripple is sitting on right now. Because what happens when you start integrating stablecoin and XRP rails into a platform that is already moving $13 trillion? The answer is you unlock one of the most powerful financial pipelines in the entire world, and Ripple is positioning itself to be right at the center of that transition. Voice. The CFO conversation is changing in real time. What I found really compelling about this part of the interview is the way Brad described how the conversation at the boardroom level is shifting. He said that CEOs and boards of directors at Fortune 500 and even Fortune 2000 companies are now going to their CFOs and treasurers and asking point blank, what are we doing with stablecoins? That question alone is enormous because it means that stablecoin adoption is no longer a fringe conversation happening in crypto Twitter threads. It is happening in corporate board meetings, in executive strategy sessions, in the offices of the people who actually control the money. And Ripple Treasury is the platform that sits right in front of those exact people. Brad gave a really easy-to-understand example. Imagine a CFO needs to send a payment to a Filipino peso account. Through the traditional rail, that payment takes 3 to 5 days and costs a significant fee. Through the Ripple integrated option, it lands in 1 minute. 1 minute versus 5 days. That is not a marginal improvement. That is a complete transformation of how global commerce can operate, and that is the pitch Ripple is walking into every single boardroom with right now. Voice. Ripple Prime. The prime brokerage that tripled its revenue. Now let's talk about that second acquisition because it is equally impressive. Ripple bought what was known as Hidden Road, the largest non-bank prime brokerage business in the space, and rebranded it as Ripple Prime. And Brad dropped a number here that I want you to really sit with. Since the acquisition was announced, Ripple Prime has tripled its revenue run rate. Tripled. That is not organic growth happening slowly over years. That is explosive acceleration happening in a compressed window of time. And the reason it is happening is pretty straightforward when you think about it. When Hidden Road was a smaller independent firm, some of the largest financial institutions in the world were a little hesitant to work with them as a counterparty. But now that Hidden Road is Ripple Prime, backed by Ripple's massive balance sheet and global reputation, those same institutions are coming to the table. They trust the counterparty now. And that trust is translating directly into revenue growth that is outpacing expectations at an incredible rate. Voice, putting the numbers together. What 15 to 16 trillion means for XRP. Here is where I want to put all the pieces together for you and really zoom out to see the full picture, because when you add up what Ripple Prime and Ripple Treasury are doing, you are looking at a combined volume that is somewhere in the neighborhood of $15 to $16 trillion annually. Ripple Prime alone is doing about $3 trillion a year in transactions. Ripple Treasury is doing around $12.5 trillion. Put those two companies together under the Ripple umbrella, and you are staring at a number that is almost incomprehensible. Now, here is the question that every XRP holder should be asking. What happens when Ripple starts migrating even a portion of that volume onto the XRP Ledger? What happens when RLUSD starts facilitating those payments instead of traditional rails? The math here is absolutely staggering. Ripple was celebrating hitting $100 billion in total volume not long ago, and now we are looking at a scenario where just these two subsidiaries could theoretically push $40 billion a day through the ecosystem. That is the scale of what is being built here. Voice. RLUSD is growing, and the acquisition impact is already visible. Now, I do want to be real with you here because I think it is important to stay grounded even when the numbers are this exciting. We are already seeing RLUSD growing significantly over the last several months, and there is a strong case to be made that a meaningful chunk of that growth is directly tied to the Hidden Road and G Treasury acquisitions. That is great. That is real, tangible, on-chain progress. But here is where I am at personally. I want to see more activity on the XRP Ledger itself before I get completely swept up in the excitement of what these acquisitions could eventually deliver. The transition from processing payments on traditional rails to processing them on the XRP Ledger is not going to happen overnight. It is a gradual process. It requires integration work, client onboarding, regulatory compliance, and technology alignment across multiple platforms. So while the potential is genuinely historic, I think it is healthy to watch how that transition unfolds in real time rather than pricing in the full upside before it actually materializes. Voice. The PayPal and Venmo moment. Why interoperability is the real unlock. One of the moments in the interview that I thought was genuinely brilliant was when Brad brought up PayPal and Venmo. He pointed out that just last week, PayPal announced that users can finally, after 13 years, move money between Venmo and PayPal, two products owned by the exact same company. And for 13 years, you could not move money between them without going through a bank. That example hits different when you hear it out loud, because it illustrates in the simplest possible way just how broken and fragmented our current financial infrastructure really is. Ripple's entire mission from day one has been to build what Brad calls the Internet of Value, a world where moving money is as easy and as instant as sending an email or a text message. And the fact that we are finally starting to see major payment networks begin to solve basic interoperability issues is a sign that the financial world is waking up to what crypto and blockchain have been saying for over a decade. Voice. The SEC and CFTC joint announcement. A monumental regulatory shift. Now, we absolutely have to talk about the regulatory piece because this might be the single most important development for the entire crypto industry in recent memory. The SEC and CFTC came together and issued a joint announcement that identified 16 digital assets that can be clearly categorized as commodity digital assets. Brad said on air that he cannot overstate how massive that step forward is, and I completely agree with him. Think about what Ripple went through. They were sued by the SEC in December of 2020, And they spent the next 4 to 5 years fighting that lawsuit, arguing that XRP is not a security but a commodity. They won. And now, just over a year later, you have the two most powerful financial regulatory bodies in the United States coming together and issuing guidance that validates exactly what Ripple fought for. If this were a movie, nobody would believe the plot. The arc from the lawsuit to this moment is genuinely cinematic. Voice: Gary Gensler. The War on Crypto and Why Codified Law Matters So Much. Brad did not hold back when it came to talking about the previous regulatory environment, and honestly, I appreciate the directness. He called the Biden-era SEC approach toward crypto a war, and he compared it to waging war on email, which is a comparison that really does land perfectly. The former SEC chair, Gary Gensler, according to Brad, was operating in bad faith. Instead of engaging in thoughtful rulemaking and providing the industry with clear guidelines, the approach was simply to sue crypto companies and push them offshore. And that is exactly what happened in many cases. Talent, capital, and innovation moved to more crypto-friendly jurisdictions because the United States made it hostile to operate here. But here is why Brad is pushing so hard for these things to be codified into actual law, because without legislation, the next administration can undo everything that has been built. A new SEC chair with a political agenda could walk in on day one and start dismantling the progress that has been made. That cannot be allowed to happen, and that is why the Clarity Act is so critically important. Voice: The Clarity Act, where it stands and why every crypto holder needs it. Brad actually made a prediction about a month prior to this interview that the Clarity Act would be signed into law by the end of April. In this interview, he walked that back slightly and gave himself an extra 30 days, saying the end of May is more realistic. He acknowledged that the process of watching legislation get made is not pretty. He described it famously as watching the sausage get made. But he came away from a dinner in Washington, D.C., sitting next to some very well-connected and knowledgeable people, feeling genuinely more optimistic than before. The key issue still being worked out is how rewards from digital assets are treated under the law. And while Ripple does not have a direct stake in how that specific debate resolves, Brad made clear that the industry as a whole needs clarity on that point in order to move forward. Without the Clarity Act, the United States risks continuing to lose ground to other nations that have already built clear, functioning regulatory frameworks for crypto. Voice: What the Clarity Act means for banks and the financial system. Here is something that I think a lot of people miss when they talk about the Clarity Act. It is not just about protecting crypto companies or retail investors. The people who really need this legislation to pass are the banks. The large financial institutions in the United States have been sitting on the sidelines, interested in crypto but afraid to fully commit because they do not know what the regulatory environment is going to look like 2 or 3 years down the road. What happens if a future administration brings in another Gary Gensler type? Then the banks would have to unwind all of their crypto-related positions and exposure, and that is a painful and costly process. But if the Clarity Act gets codified into law, those banks have certainty. They know the rules are not going to change based on who wins the next election. And that certainty is the unlock that brings JP Morgan, that brings Goldman Sachs, that brings the full weight of traditional American finance into the digital asset space in a real and committed way. Voice: XRP's use cases are expanding far beyond payments. Brad took some time in the interview to lay out just how wide the use cases for XRP are becoming, and it is worth really sitting with this because the picture is much bigger than just cross-border payments. Yes, XRP is fast. Yes, it is low cost. Yes, it is energy efficient. But on top of that, you have a growing developer and entrepreneur ecosystem building on the XRP Ledger for things like tokenization of real-world assets. Ripple is working with Guggenheim on money market tokenization. The Land Authority of Dubai is registering land titles on the XRP Ledger. These are not small proof-of-concept experiments. These are real institutions deploying real use cases on this blockchain. And Brad made a really important point that I think is worth repeating. Tokenization for the sake of tokenization does not make sense. The question always has to be, does this make the process faster? Does it make it better? Does it solve a real problem? And in the cases that Ripple is working on, the answer is clearly yes. Voice: BlackRock, Larry Fink, and the question of an XRP spot ETF. You cannot talk about the current state of XRP without at least acknowledging the elephant in the room, the possibility of a spot XRP ETF from BlackRock. Brad and Larry Fink have been in the same circles for a while now. They have been on stage together at Davos. There are shared technology partnerships and overlapping interests when it comes to tokenization and bringing funds onto the XRP Ledger. The question is not really whether BlackRock eventually files for a spot XRP ETF. The question is when. And from everything that has been reported and discussed, it really comes down to customer demand. BlackRock pushed for a Bitcoin ETF and then an Ethereum ETF because they had clients calling and emailing and asking for a regulated way to hold those assets. The same dynamic will eventually play out for XRP. Whether that happens this year or takes more time is still an open question, but the directional trend is absolutely clear. More products, more access, more institutional adoption is coming. Voice, Ripple's 2026 strategy, digestion, synergy, and explosive growth ahead. So what does all of this mean for the year ahead? Brad was pretty direct about Ripple's strategy for 2026. And it is not about making more massive acquisitions or chasing the next shiny thing. It is about digestion. It is about taking the two extraordinary companies they brought into the Ripple family and making sure that they are running at peak efficiency, that every synergy between them is being fully exploited, and that the integration work is done right rather than just done fast. Ripple increased its headcount by 50% through these acquisitions. That is a massive operational undertaking, and getting that right matters more in the short term than anything else. But beyond internal execution, Brad made clear that Ripple is not going to sit still entirely. They will continue making strategic investments and pursuing licensing in new markets, like their recent moves in Australia. And here is what I find most exciting. Everything Ripple is building right now, from the AI and agentic AI infrastructure investments to the technology integrations across their subsidiaries, is setting up an explosion of announcements that could drop in the next 3 to 6 months. Today, Assets Report will be right here to break every single one of them down for you, so make sure you are subscribed, hit that notification bell, and I will see you in the next one.